Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're going to talk aggressively now about some aggressive growth stocks with Bill Wilton. Bill is our aggressive growth stock analyst at Zacks.com, so only natural for him to come down here with a couple of suggestions in that category. But man, you've really come down here with one that's thrown me today.
Digging deep.
Yeah, you really are. I'm just going to pronounce it 012 Smile Communications Limited, SMLC, the ticker symbol. Is this a NASDAQ stock?
Yeah, and it could be a sense of a lost in translation because they are an Israeli-based company.
Right.
And what they do is broadband services, voice services. They also do some hosting data in Wi-Fi networks. So they're kind of an infrastructure play over in Israel.
Looks like they refer to themselves as 012smile.net, the short version of the name.
Yeah. Well, they just announced record company results on May 19th. They doubled expectations. Earnings per share came in at 41 cents, well above the 18 cents that analysts were expecting. And the record comes from the revenue. They had almost $70 million in revenue last year, which was up 8% to a company record. The full year estimates have been spiking since then. Analysts are continually revising upwards just to keep track with the company's growth. And they're also trading at a pretty fair value. The PEG ratio is just 0.6. And they're trading at about 11 times earnings, which is fantastic. And it's actually about 9 times forward earnings.
Does this even have a Zacks rank?
Yeah, it does. It actually slipped down to a 3 recently, but that's nothing to do with their estimates. As we know, the timeliness is an issue with the Zacks rank. So there could just be newer, fresh revisions coming in from other companies that have bumped them out of that top tier.
All right.
Right now they're trading in a pretty narrow band. Which is not uncommon for a smaller stock like this. Usually they're just going to need some type of news event that's going to go ahead and propel them out of that narrow range. So it gives you some stability, but given their next earnings announcement, we could see a nice upward movement here.
All right. And then you also want to let us know about a company called Perfect World Limited. In a perfect world, PWLD, the ticker symbol. They're a gaming company, actually.
Correct. And China's been all the rage.
Which is why they're in a perfect world, because they're in a virtual world.
Exactly. And China's been all the rage this year. It's growing exponentially over there, given their excellent stimulus package that they passed. It seems to be the favorite by the market. But Perfect World also has licensed itself out to 11 other countries, mostly all over in Asia. And things are going extremely well. They also reported in the middle of May their revenue was $32 million. That's up 36%. One of the unique things about them is while they have lost a few of their paid subscribers, they've been able to extract 62% more revenue out of each paid subscriber. So that's where their growth is coming in. They're really learning the business of how to get the most money from their customers. Their estimates, their earnings per share came in at about 56 cents. Versus a loss of 45 cents. So that's fantastic. Year-over-year growth is about 38%. Again, they're trading at a decent value as well, about 14 times forward earnings, and the growth rate's in there. It's only a PEG ratio of about 0.5.
So is Asia the new hub, the main center for new growth in gaming?
Well, it's not necessarily new. These are things that have been around for a long time.
Okay.
The growth is coming from these massive multiple player games where people can network around the world. World of Warcraft is probably the most popular one that most people know. But there's several other games like that, and they're in that arena. The other reason that people really like China is that stimulus package that I mentioned earlier. That seems to be the favorite from investors and traders. They really have a lot of stock in the Chinese government's plan for that stimulus package that they passed. So it's going to be interesting to see if that actually gets as much traction as they had expected.
Right.
But the online gaming area is a solid arena because a lot of people are staying home, not going on vacations, et cetera. And it's for lack of a better word, it seems to be addicting to those who actually do play.
Well, for the people who play online,
Yeah.
I mean, I've known young people who stay up 24 hours to play online with other people that they don't even see or talk to.
Exactly.
Why, I don't know, but
For one reason or another,
Shows my age.
They love it, and it's reflected in the stock price right now. They've got an excellent trend line going right here, a good MACD signal. I expect it to continue to grow at this rate, and we'll see what happens next time they report earnings.
All right, do you own either of these two?
I do not.
If you want to take a look at more stocks in the aggressive growth category that Bill's written about lately, get over to Zacks.com's homepage. In the upper right-hand corner, that's where we list all of the different schools of investing there. Bill's, again, aggressive growth. Click on that headline right next to that listing, and it'll take you right to the most current stock that he's written about. With Bill Wilton, I'm Terry Ruffalo.